Major crypto whales just moved 11.5 million tokens in a single week. We're talking about wallets worth tens of millions of dollars making coordinated moves while most retail investors aren't even paying attention. The kicker? They're not buying Bitcoin, Ethereum, or Solana. They're accumulating something that could fundamentally change how we think about blockchain scalability forever. What's up, crypto family? Welcome back to the channel where we dive deep into the moves that matter before they become mainstream headlines. If you're tired of missing out on whale activity while it's happening, smash that subscribe button and ring the notification bell. Today's analysis could be a game changer for your portfolio strategy. Bitcoin sits at the throne of cryptocurrency, commanding respect and institutional adoption like no other digital asset. But there's a dirty little secret everyone knows but nobody wants to talk about. Bitcoin's scalability problem is getting worse, not better. During peak demand, transaction fees skyrocket and confirmation times crawl to a painful 10-minute average per block. According to crypto commentator HashCash on X, we're witnessing something unprecedented in the blockchain space. A project that doesn't try to replace Bitcoin but actually builds directly on Satoshi's original framework while solving its most persistent bottleneck. The project is called Kaspa, and the KAS token is quietly becoming the focus of serious institutional money. But here's what's making me lose sleep at night. While retail traders argue about meme coins and the next Ethereum killer, sophisticated investors are positioning themselves in a market most people don't even understand exists. The BlockDAG technology powering Kaspa processes blocks in parallel instead of the traditional one-by-one approach that Bitcoin pioneered back in 2009. KASPLEX just deployed a WETH-9 standard smart contract signaling their imminent Layer 2 mainnet launch. This isn't just another altcoin trying to ride Bitcoin's coattails. The research behind Kaspa traces back over a decade to Yonatan Sompolinsky's groundbreaking work on blockchain scalability, moving from the Ghost protocol through Spectre, Phantom, BlockDAG, and finally DAG-Knight. Each iteration addressed critical mining incentives, block inclusion strategies, and double spend protection while maintaining the security principles that make Bitcoin bulletproof. We're looking at 10 years of peer-reviewed academic research culminating in a live, functioning network that processes one block every second compared to Bitcoin's sluggish 10-minute intervals. Crypto analyst Cade dropped some serious knowledge on X recently, calling out everyone who dismisses Kaspa as just another altcoin. His analysis reveals that KAS operates as the fastest proof-of-work chain ever constructed, maintaining Bitcoin's security model while delivering transaction throughput that makes Ethereum look outdated. No premine, no venture capital manipulation, no insider allocations. Kaspa launched with complete fairness, embodying the decentralized ethos that Bitcoin established, but with engineering advantages that come from 15 years of blockchain evolution. If Bitcoin represents the prototype, Kaspa stands as the production-ready version designed for mass adoption. The technical specifications tell the whole story. While Bitcoin miners compete to solve one block every 10 minutes, Kaspa's BlockDAG architecture enables parallel processing that confirms transactions in real time. This isn't theoretical scaling. It's happening right now on mainnet with consistent performance under stress. The whale accumulation patterns emerging over the past week paint a fascinating picture of institutional positioning. Kaspion reported that top wallets absorbed more than 11.5 million KAS tokens, demonstrating sustained buying pressure at current price levels. This represents hundreds of millions of dollars in strategic positioning by addresses that historically only moved during major market shifts. Kaspa Daily provided the most recent update tracking Wallet 8 as it added 3.9 million KAS directly from Kraken exchange. The significance here extends beyond the dollar amount. These tokens moved from a centralized exchange into cold storage, indicating long-term accumulation rather than short-term speculation. Professional traders don't move 8-figure positions into hardware wallets for quick flips. My analysis of on-chain metrics reveals coordinated accumulation across multiple whale addresses throughout the week. This isn't panic buying or FOMO-driven retail behavior. These are calculated moves by sophisticated investors who understand blockchain technology at a fundamental level and recognize the implications of successful Bitcoin scaling solutions. The timing coincides with growing institutional frustration over Bitcoin's transaction limitations during peak network congestion. When Bitcoin fees spike above $50 per transaction, enterprise adoption becomes economically unfeasible for routine operations. Kaspa's sub-penny transaction costs and instant confirmation times solve this problem without compromising decentralization or security. Layer 2 solutions for Bitcoin require additional trust assumptions and complexity layers that enterprises prefer to avoid. Kaspa delivers Bitcoin-level security with modern throughput capabilities on the base layer, eliminating the need for complicated bridging mechanisms or custody arrangements that introduce counterparty risk. Yonatan Sompolinsky's research has been cited thousands of times in peer-reviewed blockchain literature, with implementations adopted by major networks including Ethereum's consensus mechanism improvements. Smart Money recognizes that Kaspa doesn't compete with Bitcoin for store-of-value status or digital gold narratives. Instead, it complements Bitcoin by providing the payment infrastructure that Satoshi originally envisioned but couldn't implement with 2009 technology constraints. This positioning creates a unique value proposition that doesn't threaten Bitcoin maximalists, while offering practical utility for everyday transactions. The KASPLEX Layer 2 deployment adds programmable smart contract functionality without sacrificing the base layer's simplicity and security. Deploying WETH9 standards ensures compatibility with existing DeFi protocols and decentralized exchanges, creating seamless bridging opportunities between Kaspa and established liquidity pools. Enterprise blockchain adoption has stalled primarily due to scalability limitations in existing proof-of-work networks. Bitcoin's energy consumption per transaction makes it unsuitable for high-frequency business operations, while proof-of-stake alternatives introduce governance risks that enterprises cannot accept. Kaspa's BlockDAG innovation maintains energy efficiency while preserving the security guarantees that make proof-of-work systems enterprise-grade. The fair launch mechanism eliminates the insider trading advantages that plague most altcoin launches. No venture capital firms received preferential allocations, no founders control massive token supplies, and no pre-mining created artificial scarcity. This distribution model mirrors Bitcoin's original ethos, while benefiting from modern tokenomics understanding. Market cycles historically reward projects that solve fundamental problems, rather than those that rely on hype or marketing narratives. Kaspa's accumulation patterns suggest institutional recognition of its technical advantages before broader market awareness develops. This creates asymmetric risk-reward opportunities for investors who understand the technology before it reaches mainstream adoption. The blockchain space evolves through genuine innovation, not marketing promises or celebrity endorsements. Kaspa represents 10 years of academic research transformed into production-ready infrastructure that addresses Bitcoin's primary limitation without compromising its security model. Whale accumulation patterns rarely lie, especially when they persist across multiple weeks and involve coordinated moves from sophisticated investors. While retail traders chase momentum plays and meme coin lottery tickets, institutional money quietly positions for the next phase of blockchain adoption. If you found this analysis valuable, check out my recent video on Kaspa. The subscribe button helps more than you realize. YouTube's algorithm rewards engagement, and your support keeps this channel focused on actionable intelligence rather than clickbait speculation. Cryptocurrency investments carry substantial risk, including potential total loss of capital. This content represents educational analysis and personal opinions, not financial advice. Always conduct independent research and consider consulting qualified financial advisors before making investment decisions. Past performance does not guarantee future results, and blockchain technology investments remain highly speculative and volatile.